Tesla Takedown Day marked a significant escalation in global protests against Elon Musk and his leadership of Tesla. Demonstrators worldwide targeted Tesla showrooms, voicing their discontent with Musk's political involvement and its perceived impact on governmental policies. Before we move forward, please like this video and subscribe to the channel for more daily updates. Coming back, the protests were ignited by Musk's appointment as head of the Department of Government Efficiency, DOGE, under President Donald Trump. In this role, Musk initiated substantial cuts to federal programs, including Social Security, which many viewed as detrimental to millions of Americans. Jeanette Sexton, a retiree and Democratic Party precinct chair, organized a protest in League City, Texas, highlighting concerns over these cuts and Musk's characterization of Social Security as a Ponzi scheme. The Tesla Takedown movement saw coordinated protests at approximately 500 Tesla dealerships worldwide. In the United States, significant gatherings occurred in cities such as New York, Washington, and various locations in California. In Dublin, California, protesters chanted slogans like, "Hey, hey, ho, ho, Elon Musk has got to go," while counter-protesters displayed support for Musk across the street. Internationally, demonstrations took place in major European cities, including Berlin, Paris, and London. In London, protesters assembled outside a Tesla dealership, holding signs criticizing Musk and receiving supportive honks from passing vehicles. Beyond opposition to Musk's governmental role, protesters expressed broader concerns about his influence on public policy and corporate governance. The movement encouraged individuals to sell their Tesla vehicles and divest from the company's stock as forms of protest. In Charlotte, North Carolina, the #Tesla Takedown campaign motivated over 100 participants to voice their dissatisfaction, particularly regarding cuts to programs like Social Security. While many protests remained peaceful, there were reports of vandalism and confrontations. In Germany, a Tesla vehicle was torched, and in Texas, a driver displayed a holstered gun at a Tesla Cybertruck. These incidents have raised concerns about escalating tensions and the safety of both protesters and Tesla employees. The protests have coincided with a decline in Tesla's stock value and sales figures. Analysts attribute this downturn to the consumer backlash against Musk's political activities and the negative publicity surrounding the demonstrations. Investors are bracing for potentially disappointing first-quarter delivery data, reflecting the challenges Tesla faces amid the ongoing controversy. Tesla Takedown Day underscores the growing intersection between corporate leadership and political activism. As Elon Musk continues to play a prominent role in governmental affairs, public response has manifested in widespread protests affecting Tesla's operations and market performance. The unfolding situation highlights the complex dynamics between a company's political engagements and its relationship with consumers and investors. Before we move forward to an incredibly embarrassing news for Elon Musk, we should talk about a small win for Tesla. Stellantis has confirmed it will keep buying CO2 credits from Tesla through 2025. This means a fresh stream of easy revenue at a time when Tesla is facing pressure from competition and slowing sales. For years, Tesla's been making billions by selling these credits to automakers struggling to meet emissions targets, and Stellantis, despite ramping up its EV push, still isn't fully compliant. That means Tesla gets at least another year of guaranteed income from these deals, keeping a crucial cash flow intact. With regulatory credits still a major profit booster, this move adds more stability to Tesla's financials while the company navigates industry headwinds. It also signals that legacy automakers still rely on Tesla to offset emissions, proving Tesla remains the gold standard in EVs. While this revenue stream won't last forever, for now, it's a clear win for Tesla and a reminder that even its competitors need its success. Now coming to the bad news, Elon Musk's estranged daughter, Vivian Wilson, just unloaded on him in a scathing statement, calling Tesla a Ponzi scheme and branding Musk as an insecure buffoon. This isn't just another personal feud, it's another PR disaster hitting Tesla at a time when the company is already struggling with plunging stock prices, delivery misses, and global protests. Vivian, who legally changed her name in 2022 to distance herself from Musk, hasn't spoken publicly much since cutting ties. But now, she's going all in, calling Tesla's financials a ticking time bomb and questioning whether the company can survive much longer. She even compared it to Theranos, suggesting Tesla's valuation is built on hype rather than real fundamentals. Her words hit hard because they echo what short sellers and critics have been saying for years, that Tesla's stock is massively overinflated and its business model is unsustainable. And she didn't stop there. Vivian also mocked Musk's obsession with social media, saying he craves attention and validation more than actually running his companies. Musk hasn't directly responded, but he's hinted at family issues before, blaming woke brainwashing for their fallout. But the timing of this blow-up couldn't be worse. Tesla is already drowning in bad press. It's not just about the Tesla takedown, it's also about the delivery numbers. Tesla just posted its worst delivery numbers in 2 years, and it's not looking good. The company delivered around 377,000 EVs in Q1 2025, falling well below the analyst consensus of 449,180, and even missing Tesla's own lowered expectations. That's a brutal 12% drop from last quarter and about 9% down from Q1 2024, marking Tesla's first year-over-year decline in deliveries since the pandemic. The Model 3 and Model Y still make up the bulk of deliveries, but even those best sellers are slipping. China is a major factor. Tesla's Shanghai factory has been struggling with demand, especially as BYD and other Chinese automakers flood the market with cheaper, high-tech EVs. Europe isn't helping either, where Tesla sales dropped by more than 50% in key markets like Germany and the UK. North America saw some of the biggest price cuts yet, but it wasn't enough to move inventory at previous levels. Production numbers are equally concerning. Tesla produced just over 410,000 vehicles, meaning nearly 33,000 cars went unsold, and are now sitting in inventory. That's the biggest inventory buildup in years, hinting at deeper demand problems. Wall Street is not taking this lightly. Tesla's stock dropped sharply after the report, wiping out billions in market cap. Analysts are calling this a demand crisis, with some slashing price targets. Morgan Stanley noted that Tesla's delivery miss raises major red flags about growth potential, while Goldman Sachs warned of a prolonged period of declining margins. Elon Musk, on the other hand, is downplaying the drop, blaming it on supply chain issues and disruptions from shipping delays. But investors aren't buying it, especially since competitors like BYD, Volkswagen, and even Hyundai posted strong Q1 sales in the same period. Also, on 2nd April, the Tesla will release data for first quarter deliveries, a proxy for sales, that is expected to show a dip on the same period last year. Tesla investors are bracing for one of the most highly anticipated sales reports in years. With the company already reeling from slumping demand, price cuts, and growing consumer backlash against Elon Musk, this report could be a make-or-break moment for Tesla stock. Wall Street expects the numbers to be ugly. Analysts are projecting one of Tesla's weakest quarters in years, with deliveries falling well short of previous targets. The biggest concern? A consumer shift away from Tesla, not just because of market conditions, but due to the growing controversy surrounding Musk himself. His outspoken political stances, close association with Donald Trump, and recent actions as a government advisor have alienated a huge chunk of Tesla's once loyal customer base, especially in progressive-leaning markets like California and Europe. This political baggage is now hitting the bottom line. According to industry analysts, Tesla's US and European sales have declined significantly, with key markets like Germany seeing Tesla registrations drop by over 50% year-over-year. In China, Tesla is losing ground to BYD, which is dominating the EV race with cheaper, higher-tech models. In response, Tesla has been slashing prices aggressively, but that's eating into margins and raising fears of a profit squeeze. The bigger issue is whether Tesla has lost its edge. Brand perception is shifting. Once seen as the undisputed leader in EVs, Tesla is now viewed as a company struggling to keep up with Chinese and European competitors. Legacy automakers like Volkswagen, BMW, and Mercedes are offering compelling alternatives, while BYD and other Chinese manufacturers are outpacing Tesla in affordability, battery tech, and market share. Dan Ives, managing director at the U.S. financial firm Wedbush Securities and a self-avowed Tesla core bull, said 30% of the anticipated decline was due to brand damage associated with Musk and his involvement in the so-called Department of Government Efficiency. The consumers are waiting for an update to the top-selling Model Y. The U.S. is Tesla's biggest market. Dan Ives also said, much of this softness is related to customers waiting for Model Y refreshes, along with a lower-cost new model set to be launched by the summer. The anti-Musk and brand issues are clearly at play. For investors, the question now is whether Tesla can weather this storm, or if this is the beginning of a long-term decline. If the upcoming sales report misses expectations badly, Tesla's stock could face another sharp drop, and with it, even more scrutiny on Musk's leadership. If there's any bright spot, it's that Tesla still has strong brand recognition and a loyal investor base. But if sales continue to slide and consumer sentiment keeps shifting, the company could face its most challenging period yet. Do you think Tesla can get back up again? If yes, how will that happen? Let me know in the comments section below. Also, please like this video and subscribe to the channel for more daily updates.